Making Stock. It is Tuesday, the 28th of November, 2023, and it's a Tuesday. So Johnny Boy's here. All right, Johnny.
Hello.
It's cold outside. The market's a bit cold. In fact, quickly, let's straight go cover the indices and look at them. They're all down. FTSE 100 down 0.41%. FTSE 250 fares a little bit worse, 0.64%. FTSE AIM all share 0.33 in the middle there of the two. Biggest rise today, Rolls-Royce. And it's doing well. By the way, if you are tuning in, join in, get involved in the comments, hit that like button, subscribe, do something. Even download the Vox Markets app. It's free. Did I tell you that before? It's free. voxmarkets.co.uk/app. And what I want to cover today, John, right? I said a couple of companies, largely the markets are down. And you're seeing, I think, we're going to have these Bailey came out yesterday saying, the market is struggling. In fact, we'll cover that a bit later.
Well, he was talking about the economy, wasn't he? He said,
the economy. He's worried about growth. He said he hasn't seen this lackluster growth in his lifetime. So, well, you're part of the problem, mate.
Which rock is he living under?
I know, but he is part of the problem, isn't he? What are you talking about? So, you've got high prices on one side, crushing people, and then you've got high interest rates as well at both ends, chopping your legs from you and taking your head off. So anyway, but what is important, if you're looking for investment ideas, it's very important, I think, to, this phrase, winners keep winning, losers keep losing. And that kind of thing, cliches endure for a reason. And this is important when it comes to investing, I think, as well, because, when you see companies coming out with good results, and again, they beat expectations, it's not one-offs generally, in this environment. They keep coming out and hitting sort of, new upcycles, upgrades, and they keep doing well. They hit 52-week highs. And there's a study out, I've read this quickly, and I've read it before, but they say a study found that when companies with stock prices close to their 52-week highs had better than expected results, they had larger stock price increases compared to companies not close to their 52-week highs. So I've done a quick screener here, and these are the kind of companies here that are hitting 52-week highs. And you can see Rolls-Royce is in there, and they're up again today. Yeah, 3i Group, Metals Exploration, with somebody actually pointed out recently. And next is their Computer Center and Cranswick. So what I want is a little help from you guys and gals listening here, if you could. What I'm after is companies exceeding expectations. Have you read any recently where you've seen the company just announcing we're exceeding expectations? Because it tends to keep happening. Winners keep winning. And it's
next. I'm just having a look at the next chart.
Yeah,
momentum is a very, very powerful factor.
Yeah,
in investing, it does. It does play a huge part. And you're right. Where there is a strong trend and companies, have a tendency to then, upgrade cycles. We've talked about before, earnings upgrade cycles. They have a tendency to continue for a while. But then you look at next, it wasn't always winning. Sentiment was against those shares for quite some time. So, if you'd have bought it in October 2023, you would have done rather nicely. So October 22, rather, you would have done rather nicely. And, that certainly wasn't a winner at that point. So, I do think momentum is interesting and a potential, good strategy to potentially follow. But I also do think sometimes value
both. Yes, absolutely. I think the two most important things, are growth and value. And then hopefully if they come into this series of cycles where they are exceeding, their momentum kicks in. Like, look at that from Nexa there, phenomenal. From 2008, 2009, it was 10 quid a share, 80 quid a share.
But then you could talk of, there were big trends behind that. So Next, obviously being a very large bellwether of the retail sector, after the credit crunch 2008, you saw a lot of smaller retailers really struggling and the bigger boys, if they were well run, winning, picking up shares. So Next is obviously a big beneficiary of that.
Look at Rolls-Royce there. I mean, even if I've got the 200-day moving average on the bull bear line here, but literally, it broke above that in November 2022. So almost a year ago, about 10th of November, a year ago, 88 pence is now 259. So all I'm saying, I mean, that phrase, winners keep winning and losers keep losing, they do until they don't. So there's that little,
That's the other problem with momentum.
But the thing with losers, it's no one jumping straight away, because sooner or later they get downgraded. Sooner or later, it's quite easy for them to beat then, isn't it? Because they're downgrading, and all of a sudden, all they need is a half decent year, and they'll beat previous estimates, because the last few estimates have been dreadful. So, and then if they continue to beat that, then on the upcycle, there's almost again that the timing right. But all I'm after, if there's any AI boffins out there, what we could do with is some kind of scraping facility that looks at all RNSs in the morning and looks for companies that are exceeding. And for the first time they start exceeding, they tend to do it again because previously they've been a loser and now they're changing to become a winner. So if you get that right, that timing, where they've been having a hard time, management turning it around, then turnarounds take a lot longer than you think, don't they, normally? So there's no one jumping in on the first sort of upgrade. But generally, once they've sort of got a handle on it, and it's easier for bigger companies because they have deep pockets, I suppose, and they've got good management, or they can employ good management, get some good people in. It's harder for smaller companies,
Well, Rolls-Royce is a very good example of a company, that was very, very much out of favour for a very long time. Obviously the pandemic, it makes its money by planes being in the air and its engines being serviced. So the pandemic was obviously disastrous for Rolls-Royce. But the problems within this group were they were bubbling up for quite some time before that. So it was a big company. The problem with big companies and turnarounds is there's a lot to turn around. They're complex. They're huge. It's turning around the old supertanker. So they do take time, but in Rolls-Royce case, it's taken several changes of management to really set this price on the upward trajectory again. I don't know. I kind of like value, but the problem with value, rather than momentum, is that you can be right for a very long time without the share price going in the way that you expect.
Yeah. No, that's why just combining two of those grow. What was that then?
I don't know.
I had balloons on my. So I'm messing around. I had balloons on my screen. It's not my birthday.
Turn into a cat in a minute.
But trouble. No, the trouble is, I think people look at either. I've got again. Someone's messing around with my thing here. I've got what the heck? The trouble with looking at one thing is value, is that there's no growth. I just think pair them both together, growth and value. If you can get that, and they're very rare, it doesn't happen very often. Do you know what? I've been literally researching for ages. Last few days, I've been researching, looking for both. It took me ages. I found a company that has both, but I mean, it does take a long time. These companies, they're not 10 a penny. It's very rare to get growth and value, and sometimes it comes from. In fact, a good point of investor, AI investor here. It's a totally hammered day after poor interim results, group turnover down, and all that stuff. But again, I believe that in time will turn around. And it's that turning around. If you get that timing right on that, I think you do very well. Totally. It has been hammered a little bit. Who's messing around with the balloons? I don't know how that
happened. It's not me, I promise you. I don't know how to do
that. Tom says, good update from Good Energy. Market reaction not good. Hang on, is good reaction.
Up 6% stuff.
Yeah, but again, Good Energy. A while back, I invested in those. I thought, am I wrong here? Because I'll show you where I invested. I was investing down here, and it started to tick up, and it broke 200 a day. I thought, okay, here we go, and it really took off. It went from 181 to 360. It doubled now, and yet they keep coming out now with updated guidance saying 4 million at least before tax, and they've got a tumbler of cash, about 20 odd million in cash. And so at the time they were valued, when I started investing them, they were literally way below net asset value. They weren't far off cash levels. This is nuts, because they've got a new strategy in place, and the margin's going to get bigger, and the top line revenue is big, but I mean the margins are what's important, because the margins are very thin. And so that there, it keeps, look at that chart, it keeps going up. I mean, it is a bit worrying how fast it's gone up. Yeah. I didn't figure that turning around. But anyway, if you spot any, ladies and gentlemen, any companies out there you've seen, I mean, like I said, Rolls-Royce here, a classic example there. Like I said, they've come from a very bad point of area where they're in COVID. where they couldn't get, the planes weren't in the skies and all that stuff. But now, look at this. They're literally clear vision and strategy will create high-performing, competitive, resilient and growing business. Midterm targets set to deliver record future performance, operating profit between 2.5 and 2.8 billion pounds, operating margin of 13 to 15, free cash flow at 2.83 billion. So it's all good. Return on capital, 16 to 18%. Just seems to be getting better and better there. So
there's a lot of scope for improvement. This strategic plan points to lots of areas where there's real gains to be made. The small modular reactor side of things is very, very exciting. There's lots of operational upside throughout the business, and that's really what this capital markets update is talking about. That's what's got people excited today.
BP Marsh. What do they do again? So someone says specialist private equity investor, early stage financial services business will consider investment opportunities. Okay, so someone said these are there news out today or
I haven't
not?
Noticed anything.
Oh no. Okay, so someone's commented on those. BPM. Let's have a look. BPM. Let's have a chart there. Yeah, see, I mean, it's against the most trends of charts out there at the moment. Most are going, bottom left, top left, bottom right. This is above 200 moving average. It's moving up. A little dip today. That's decent. Seems decent to me. Absolutely anything like that.
Journeo.
Yeah.
They've got
Journey again. Journey again. I missed out on these. I was looking at them.
But you say. You say you've missed out, but if the thesis is correct that you buy winners, then buy Journeo. But now it doesn't matter if the share price has risen, if it will keep rising.
Yeah, no, I have put them through my spreadsheets, and I do like them. I do think that
they don't look expensive on a forecast basis. Talking sort of PE ratios, 11 for 2023, 9.7 for 2024, so not expensive.
No, I
and
do
it's
like
building
them.
a really powerful niche, and the growth is rapid, and it's acquiring well. Great company.
Yeah, they say anyway, exceeding there. They say as a result, the company expects adjusted profit before tax full year to be ahead of. That's what I'm looking for.
That's what we're looking for.
How do we filter for that, Johnny? We need to filter for companies ahead of market expectations, all that kind of stuff. And we'll check out then the growth in the value prospects. But yeah, 3.9 million, they say, further demonstrating the company's resilience and ability to maintain performance. And it's cracking. But, if you looked at this, I mean, I kept saying they were releasing contract after contract.
And
they were in that range for a long time, between 140 and £1, and then they broke up there.
There you go.
And it's nice. There we are. And they're challenging those highs again. But you can see there, when it broke up above 200 a day and broke previous highs there, which literally broke by 140, it really moved nicely.
I think a lot of the time, for a lot of companies, there are a lot of companies on the market, and I just sometimes think it's awareness. Of certain companies, it just takes a while for the market to catch up.
Absolutely.
That's actually one of the attractions of smaller companies being, more under researched than large ones. Although having said that, Rolls Royce is very well researched, and you could have done very well out of that this year.
Yeah. So let's look at the front page of Vox. In fact, let's go through the list before we go to content here. Upland is not. I mean, they did a complete joint technical study there. And they said they're going to go into this and take that forward. That's SK33 block. What's the chart on this like? Because we had that ridiculous scam takeover bid, which took it up and then came back down. It's not moving. There we are. But that's Upland. 18 Energy fundraise, proposed fundraise. Alien Metals, MOU, Atlantic Lithium. Some good news. In fact,
all good news there. Share price recovered a little bit there.
Yeah, Victor. I do like the way they've arranged these. 106 meters continuous pegmatite. This is outside. Now they obviously have done the definitive DFS and all that stuff on the Awaya lithium project. Now this they are exploring outside that mineral resource estimate, and the results are looking very good. Hopefully, I catch up with Neil and chat about this. But they say multiple broad intervals of visible spodumene reported out of the current MRE. They got some. I like the way they arranged that. Look at that.
Ooh, pretty.
I like that. That's good arrangement of these sort of pigment coarse fragments of visible spodumene evident there, and it fits in with the way the DMS processing, which they're going to use at Awaya. So this is very good. They seem to be surrounded there by decent grades of lithium there, spodumene there. So look at that little chart. It's a lot. Because look at that. I really like that arranger. It's good array. That's like a collector, isn't it?
It's fascinating. Yeah, no, it is absolutely fascinating.
What is the chart like on Atlantic Lithium?
It has been weak, but it is starting to.
Oh, look at that! Now. It's trying to get above that 200 day. Look at that! It's right on it. It's right on it. And in fact, if you look at that, that is, if it closes here above or above there, it's it's the highest it's been since July. So that's not bad. It's starting to move in the right direction. Maybe I think a few more bits of good news. It could start to move there. That's starting to shape up nicely there. What else you got on the front page? So most followed EasyJet.
Well, there's some very good news out today. Really good numbers.
What are they saying? Restating the dividend, don't they?
Yeah, it's. I mean, the profit numbers are record pre-tax profit 455 million. It's record second half pre-tax profit. So I mean, this is again, you'd expect there were some really good numbers out from Ryanair not so long ago, but demand for travel is off the chart at the moment. It's really bouncing back.
I was listening to this, right? And they're saying now there are expectations creeping up again that a recession is going to happen, that may hit travel a little bit. The chart on EasyJet is not good, though, is it? Look at that, sticking the hammer in. It's not even
yeah.
Look at that. Yeah.
It's a horrible chart, but, airlines been a tricky business.
That's most
followed. Huge amounts of money.
Metro Bank, apparently there's rumours now Barclays going to buy their mortgage book off them. That's how I've heard that recently. What else have we got? Rolls Royce is there. Fusion antibodies, optimal collaboration there. EasyJet's up there as well. Let's just quick look at the figures on EasyJet. October RPS. What is that? The headline profit before tax, 455 million. That's a 633 million year-on-year improvement. Profits grew by 221%, delivering 122 million profit before tax. Okay.
Yeah.
Dividends reinstated. Well, it's good energy there. Let's look at some of the
DPEU range. I thought was quite amusing. They had a call plan today, and they've cancelled it because they're being bought. So that was there you go.
Okay. Yeah. So what do they have? What a call planned?
They had a conference call.
Okay.
Yeah. They pulled because they've been bought. Or they're being bought.
Jubilant Food Works has offered. So it's not a huge amount of. What's the price then? Offer price of 85 pence. Okay.
So it's pretty much there, isn't it?
Premium. Yeah. Okay. Let's look at some of the things. So news out. We got Glass recommends. In fact, it's funny. Rightmove. Have you seen Rightmove now? They're going into mortgage broking.
Why not? I mean, keep expanding.
Well, they got about 80% market share, something ridiculous. But on the market now, of course, being taken out by an American player, so there'll be a lot more competition in the market. You assume that the player's got deep pockets, and maybe it's going to provide a bit of. So you see,
OnTheMarket has a very good range of services.
Yeah,
that it offers, across the property market, across the residential property market. You would be slightly nervous if you're a Rightmove shareholder, and a good platform is being bought by an aggressive US competitor who has, as you say, the funds to really push hard in this market. So
we got Crimson Tide there. Increased demand. What's going on there, Johnny?
Really strong numbers today. Really, it's this it's Internet of Things. So this is operational efficiency, and I think this is sort of what you see reading across in a sort of loose way. Good energy. All companies are working out how to run themselves as efficiently as possible. No wastage. I think that's something that when times are tough, companies like to run a tight ship. Whether that's buying energy or how they sort of run their assets, and Crimson Tide is right in the sweet spot of that. Let's look. So today's winners: PP Marsh, Nvidia, Journeo graph worth a look. Just look at that. That's Graham. Thanks, Graham. I think I've done. I've seen you comment before, Graham. It's good to have a new commenter on. Welcome along, Graham. Sitting on a good update. It was very good. Still multi-bag potential even now, I reckon. The TJ09 bidding expectations. Yes, Supreme and Hollywood Bowl. Actually, Supreme. Actually, yes. I mean, I do feel as if Supreme is suffering a little bit because of the worry around vaping and all that. But I heard, I listened to sort of Radio 5 Wake Up to Money, and after that, the morning show, and
the main guy was on there talking about it, get ahead of the curve, saying, everything now we are producing are vapes. They're plain packaging. There's no fancy names like, Raspberry Raz or any of that stuff. It's just plain packaging, all that. It's aimed at people wanting to give up smoking. It's not aimed at kids. And he said there shouldn't be any cartoons. And so it's good that trying to get ahead of the curve on this. But excellent results here. Revenue growth, 63% up, 105 million. Stronger. Just EBITDA up 88% to 15 million. Pre-tax profit up 179%. To 12.3. So it was interims, isn't it? 6 months, yeah. So you double that and you get to 24, 25 million. Well, they're on a P of 5 because they're up 13%, David. They are literally,
2024 P 7. I make it. Well, that's probably been would it be upgraded now? The numbers have been upgraded on today's figures. So cheap as chips.
They are.
That sort of value. That's where you put your value and growth combined there. But usually when something is that cheap, there is a reason that it's that cheap. And
I just think it's
as you say, the
regulation worry.
Regulation worries are there.
But what I like about Supreme, like I said, they are getting ahead of the curve. They said themselves, any company, trying to sell these, it should be massive fines for companies caught selling vapes to kids. And I agree with that. And so they are trying to get ahead of it. And they are very much in the camp that, vaping should be for people trying to give up smoking. It shouldn't be aimed at kids. And that's what they're saying, which I quite like that. So they seem to be ahead of the curve on regulation. And they're up for it. They say we need regulation. It needs regulation. Of course, that's not their only part of the business, but it's a strong part of the business.
Indeed.
But it has broken up on the chart. It has broken up to this level before, 130, or just come back down. It'd be interesting to see if it can get above that 130 level, because it does struggle up there. But like I said, they are, it seems very good values there if they can keep churning out those kind of numbers.
I mean, Paul's spoken to the management team. There's an interview on the site.
Yes.
This is what they say. Straight from the horse's mouth about what they're doing there.
Yeah. It's worth watching that. Okay. Let's have a few more comments here.
I've actually written something. I haven't published it yet.
Go on.
I had a look at Focusrite this morning.
Oh yeah.
This is like a sort of personal interest, because as you probably know, I do like to dabble in music production. This is what Focusrite does. I didn't know you like to focus in music production, John. So as you've seen all my gear.
Yes.
It's not here at the moment. So I've sort of always been interested in this little subject. We've spoken about Gear for Music before, which is a sort of reseller of this stuff. Focusrite is the company that actually makes the stuff.
Yeah.
I had a quick look at it today. The shares are in the doldrums, to put it mildly. It's been a tough old time for this company, because it's basically got two strings to its bow, two divisions. One of which is content creation, so synthesizers, software, that sort of stuff, audio interfaces. And that's had a great pandemic, because everyone sat at home, started to decide they want to become the next David Guetta or whatever. David Guetta, we think more electronic end of things.
Okay.
And so business boomed. Then they had another division, which they bought in about 2019, which is basically big sound systems for events, And obviously that didn't have a good pandemic because there weren't any. Now that business is booming, the audio reproduction business, big speakers, big sound systems.
Revenue growth.
Content creation is having a bit of a tougher time, because having had this sort of splurge during the pandemic, the sort of people taking their foot off the gas. There was a lot of overstocking. The supply chain crisis has sort of affected this industry quite badly. So it's been pulling in two different directions, the market for this company. But I have a feeling things starting to normalise. Second half was a lot better than the first.
Yes, do you know what? This is going to be a company I put on my watch list here, because like I said, it's a decent company, isn't it? And they've gone through. We have had issues, but it's the chart is down, but the previous low is around about 417. It didn't get to that today. That's quite encouraging. So you obviously, as the downtrend stopped, maybe it's worth looking at. So a profitable company on there. So what's your net debt of? They have net debt of 1.3 million.
Just about $1 million.
Yeah, not a lot.
They're really good acquirers. I like it. Obviously I have a sort of personal interest in the products.
Get into it, John. It's like that. Person Yeah.
But yeah, you just, I mean, it just feels like one of those companies. The shares are so cheap, and it's a market leader in Martin Audio, the big speakers, a market leader, dominant position in the UK, and big, lots to go after globally. It's got some amazing brands. If you're a synth geek like I am, and yeah, I can't see, a company this cheap and operationally strong, staying independent if the shares stay this cheap. This
Well,
is
look at
this.
that. Net cash through operations, 26 million generated. That's versus 8.4 last year. That's decent there.
So yeah, just had a bit of a tough time, and I just, could this be the end of that tricky period? It potentially looks like it.
And they pay a little dividend, don't they? A bit of a dividend.
Yeah, yeah.
They're on my watch list. I'm going to put.
They're on mine as well.
And I put the 50-day moving average on there a second, and I say that they fail to break that. But what I do, I put a little alert. Next time they break that, and I run through the spreadsheet, and I say, right, tune, yeah,
tune.
Okay. I've got that in there already, I think, but I quite like that. Okay, nice. All right, so cover some lots of comments here. Supreme Hollywood Bold, yes. Speak next to Rolls Royce, just mentioned on Bloomberg as a top pick on Euro stocks. Yeah, that probably means a top then.
That means the end.
Yeah, that's it. Dagger 80. I'm very surprised easyJet hasn't moved further, especially after reinstating dividends. Oh, in fact, is that hitting that like button? I don't know if someone hit that like button. Maybe that's the balloons thing effect we just got. I don't know if it is on the thing. I don't know if it is. Who knows? Justin has been hacked by the Chinese balloon police.
Excellent.
Yeah, I know. Rolls Royce make the best jet engines. Yeah. Derek says HOC, good chart, good gold play, large cap, and moving. Yeah, Hochschild money, isn't it? Let's look at Hochschild. It seems to Hoc. Where is it? My thing's in the middle. There we are. Let's have a chart here. Yes, starting to move up there.
Yeah, I know it's another gold miner. Hummingbird was up quite a bit today as well. I didn't see any.
So what's happened?
See any news?
Yeah, I've heard a lot of gold bugs talking about why the gold price will hit new highs of late, because they're saying we'll go back to quantitative easing a little bit, and they have to print more money sooner or later. And but have you seen that? It's quite nice. Look at that. You can see that previous support year, Hochschild, and it hit that again at 95. Broken up nicely. That's a good little chart. That
just to reiterate my thesis on gold miners. They've as we've said, the inflation has been tough for them. The energy, their costs had gone up substantially. Over the past couple of years. So even though the gold price had risen, they weren't reaping the full benefits of it because their costs had risen too. And so as that's held back gold miners. But as those costs sort of normalize, you might see a bounce back across the sector, and it does seem that we're now seeing that.
Russ, we just talked about Atlantic Lithium, further great intercepts, outside current resource. Yes, Marx's STX is had a rough time after patch after placing. Now directed buying and growth expectations 24 looking good. What is the chart of STX looking like? Someone Google why we had balloons on our screen, please.
The chart for STX looks horrendous.
Oh yeah, it does. Yeah. I missed that. You got a line there. Maybe that's is bumping on the lows. So not good. Yeah.
But the numbers. I mean, the product, the top line is forecast to grow very, very sharply.
Yes.
So again, it could be. It's just tricky.
So just got a thing on Venture Life, because they've been rising recently. Who's Close Asset Management? There we are. That's why they've been rising. Whoever Close Asset Management are, just taken a 5% stake in, and that was in the. Where are we? Yes, that explains the rise last week. So 16th, 16th of October is when they sort of announced or did that crossing, and you can see they've risen. In fact, look at that. 15th, 16th, there we are, the big up day there, and then of course powered that up.
That's interesting. See, it takes a while to build a 5% stake, to actually buy it, and there you're seeing the effects of it.
Very
interesting.
That's anything else on here? Look, I looked at Kinovo. Oh, Kinovo had some results out, didn't they, today?
Yeah, I haven't looked at them, I must admit. But again, I like this company.
30%. Oh, do you fancy a cat t-shirt, John?
No.
That nice. Interim results. Revenue increase a smidge, 2%, 30 million. Gross profit up, though. Gross margin increase. Adjusted EBITDA up 21%, 2.9. Operating profit up by 47%, 2.7 million. So cash conversion of 92% during the period. That's down from 30%. Net cash of 1 million. Okay, they're not a lot of cash, but they are, well, I assume, generating cash there. Kin, let's have a look.
Yeah, I like the company. I just feel it's in the right areas, for when it comes to sort of support services and construction. Urban regeneration. There's a lot of that that's going to need to happen in the years ahead. And I do, think with a general election that's increasingly likely it's going to be early next year, there's going to be some real political will when Labour win, which you think they would, to really sort of put some serious investment into some of Britain's more deprived towns. Renewables, there's traffic there is only one way. I was speaking to a guy yesterday at Octopus Renewables Infrastructure.
All right, yeah.
And it's just there's so many new projects in the pipeline.
Yeah.
So yeah, I just feel that this is a company in the sweet spot of where a lot of spending is going to go next year. Kinovo, that is.
Yeah.
There you go. Isn't that another nice chart as well?
Yeah, it was. Yes, very good. Anything else? Metro, Fab, Kinovo, Destiny has been sell off a little bit. Totally down. Good energy up. Hummingbird there. I did look at the chart there. Is breaking up previous resistance there. Totally biggest faller. What else?
Yeah, I had a look at that statement. It's,
it's NHS and government. It's a trouble.
It's just working with the government. I mean, and I just talks about Kinovo. I guess that that would fall into the same bracket of being dependent upon the government. But the NHS is difficult to work with. And I mean, what we've seen here is a big old contract that didn't renew. And
I looked at Marlowe earlier, and I thought, well, I started looking down, thinking this is not too bad. 30% top line, EBITDA 10%, and there is net debt, excluding lease liabilities, 192 million, and you realise they are literally it's half net debt, they're half their market cap. So they're literally, and in this environment, you don't want a lot of debt. It's not cheap. No. It's gone up from 156 to 192. So if anything, you should be bringing that down. It's going the wrong way in their net debt is. And there's plenty of companies out there with no debt or very little debt or very manageable debt. Why go for companies, that seemingly have lots of debt? Because it's a big risk, in this environment.
I think debt is easier for larger companies to carry, than smaller companies. They have the ability to borrow more cheaply. They tend to have sort of cash flows to service it. I wouldn't want to be a sort of mid-cap, small cap with a balance sheet that looked like that.
No. By the way, Gregory says, where's it by? Gregory says, can you have a look at Warpaint? And I did look at one. I just said, I did look at Warpaint a few days ago. It was inflation rate drop. This company, I'll show you. Gregory, look at this one here. Take the stock. This company is outstanding. Can you name another? There we are. Just scroll down a couple of days. I did look at I went through the spreadsheet and everything on Warpaint. The only thing I'm worried about is an excellent company, fabulous company, but it's not cheap. And sometimes you have to pay up for quality. But that's the thing I was sort of worried about. But and in fact, let's look at the chart on Warpaint.
I think
W7L. Let's have a look. Like I said, look at that very strong chart. But it needs to break above these previous highs pretty much. But again, it's not cheap, is it?
I think you're right on the cheapness. I'm just looking at forecasts. We're so I mean this year, pre-tax profit growth, so EPS grows 43%. So you're really only that's quite cheap on the basis of a PE of 20. Your PEG ratio is 0.5 there, so that's actually quite cheap. But then you look forward, and 2024 EPS growth is only 8%. So a P of 8 and then starts to look expensive in future years. So it's a tricky one. It looks pretty fully valued at the moment.
And I'm not joking. I keep saying this, Gregory, but they had growth down here. Look, right? And this is when they broke the 200-day moving average. And look at that. And he hasn't touched that. Maybe because get rid of the 50, as you can see.
Yeah.
But they haven't touched that 200-day moving average. Look, since then, since literally October 2022. And look at that, it's gone straight up pretty much from, and they broke that at 132, now 324. So just, it's getting at the right time.
Very
down there, they're probably very good value, actually. Very good value. These do align, technicals and fundamentals can align a lot.
We actually talked about Warpaint on one of our stock screening podcasts in October 2022.
Wow, that is there.
146.
In fact, that's why the box. Yeah, that's why the box is
146% return.
Yeah,
146.
Well, in fact,
I didn't buy it.
Hey, Johnny, do you know what we should do on a Friday or Tuesday? Maybe let's do this again. Let's do once a week, maybe a stock screen. I've done one there on 50 week highs, but it's quite a rough one. But looking at growth and value, maybe next week.
Yeah,
so actually, pick a couple of these out, and we'll just run it and we'll look through it. And maybe give someone, give us all some stock ideas.
Yeah, we've got some good ones out of that. Warpaint was so we're one of them. Devro did well, got taken over very shortly after we talked about it. Games Workshop has bounced back very strongly since we brought it up on a stock screen. A Hollywood Bowl, Ultimate Products, UP Global Sourcing as it was. Well, I mean, it's a good exercise.
Yeah,
we got more right than wrong coming out of our stock screens.
Yeah. Well, I mean, it's worth it if you never looked at screens. I mean, let's do that then. Tuesday or Friday, not up to you, but either or. We should look at that. Okay, let's just quickly then look at some. Some macro stuff. I don't know if you saw this, but it's still growing. But UK shop price inflation, the lowest since June 2022. So the annual shop price inflation dropped to 4.3% in 12 months to November. It's weakest since June and slower than October's 5%. So that's going in the right direction. This is about Bailey, concerned about UK growth. And he said, there's no doubt it's lower than it's been in much of my working life. There we are. And you're involved, fella. You're part of the problem there.
I mean, I think that's slightly unfair on Andrew Bailey. Yeah. I mean, I would suggest that it's more the responsibility of government to create growth driving initiatives. And this is why I think we sort of, the imminent election is only going to go one way. His job is essentially to manage inflation, and although inflation got out of control, that was again partly the fault of sort of fiscal policy, fiscal support during the pandemic. So I mean, I know he's very unpopular, but he's had a bit of a tough gig, and I don't think he's responsible for growth in the sense that he's got to fight inflation primarily.
Yeah. But the thing is, inflation and high interest rates, it tends to affect the poorest as it would. And I'm just thinking, is there a way around that somewhere? People who actually, honest working families are actually struggling. And anyway, by the way, OBR, it's cut its growth outlook to 0.7% in 2024 and 1.4% in 2025, down from previous forecasts of 1.8%, from 1.8% down to 0.7%, and halved, more than halved, and to me it's a bit scary. But I couldn't find whether this is inflation adjusted or not. But UK online spend rises 5.6% over the cyber weekend. This is down to Adobe. I don't know where they get the stats from. Adobe. I have no idea. But I saw that in America as well. Adobe were giving out the figures there as well. Adobe. I use Adobe to edit audio. It's like, what do they know about it? But anyway, it said. The Adobe Analytics, there we are, on Tuesday, up 5.6% year on year. Having said that, it didn't say it was inflation adjusted. So, inflation's up pretty much over that. So that's just flat, isn't it? Really?
Useless stats.
If that.
Useless stats.
Yeah. In fact, buy now.
Anything for a press release.
Yeah, this is quite telling though. But buy now, pay later services over cyber weekend accounted for 13.8% of total online spend, up 15.8%. So people are now putting off paying now, which is a little bit worrying if you can't afford to pay it now. Because why would you pay later if you can pay now? Because it's only going to cost you money, isn't it?
It's things like Klarna, isn't it? So you pay in installments.
Yeah.
But yeah, there's a lot of spending on credit. It's a hard habit to kick, the old shopping habit, and certainly over in the US, there's all the excess savings that got built up during the pandemic are almost gone. So and credit's been rising as well. It does feel like something's going to break in retail, but it always feels like that. Always.
Yeah. So finally, Riffsoft said, I can't find anything on Google about balloons showing up on YouTube. I found something about a guy who's attracted to balloons. He's at least buy the balloons dinner first. So yeah. But no, there we are. I don't know where that came from. It's very odd, but maybe it's an anniversary of some kind. You normally get that some kind of, maybe it's via Zoom, as we connect via Zoom. But who knows? Thank you everyone for watching. Don't forget, if you could hit that like button, get us. More people will find us. Apparently, that's the way YouTube works. And most important thing of all, two things. Subscribe to our YouTube channel right here, and also download the Vox Markets app. Yeah, that's it. Thanks for that, John, and I'll see you on Friday.
See you Friday.